Hello, good evening.
Good evening, everybody.
Yes, we are so excited to have you here with us today for our webinar back in the month of April. Yes. And we're so excited to have loan process and down payment programs webinar this evening with you.
Yes, we have a wealth of knowledge to share with you.
Yes.
But first of all, let's introduce ourselves.
Of course, if you don't know, we are Kimberly Turner.
And Denise Turner.
And we are the Turner team. We are a mother and daughter team who specialize in residential and commercial real estate, who work with buyers, builders, sellers, and investors in state and out of state with our top realtor partners.
Yes, we're all about real estate.
That's right. And you know what? We are passionate about it. You know, if you need to prepare to buy, that's okay. We have free resources for you, and we welcome you to schedule a call with the Turner Team Realtors. And you see the QR code on the top of our screen, and we are glad to talk about how we get you ready to buy. And today, that is what we're talking about. We're talking about residential real estate. And we have a special guest, none other than one of our preferred lenders, Dion Fields, who is with Cadence Bank and has the title of Vice President, Community Development Lending Division Manager. Yes, he's excellent.
Yes, he is. And we're just so happy to have him today.
Most definitely. And listen, this is going to be a great one. So take a moment now and like and share this webinar out to your friends and family who you know may be interested in buying or selling their home or a investment property, whatever the case may be. Make sure you take the time now to let them know to pop in and learn about how they too can become a homeowner today with the Turner Team Realtors and Dion Fields. Now, my mother and I, we have a background in advocacy.
Yes.
And my mother has her MBA, her Master's in Business Administration, and I am a practicing attorney. So we work with our clients and make sure that we add the educational empowerment aspect of real estate to our transactions with you. So you're in for a good one tonight.
Yes, but another disclaimer, Kimberly.
Yes.
You don't do real estate law.
For my clients during the transaction, right? So we are putting our disclaimer on the screen because anything that we say tonight, of course, it's coming from an expert advice as realtors, but we are not giving legal advice or CPA information or any other professional information, and you need to consult with the proper professional for any information shared outside of real estate. And talk to us about that which we share. All right, let's get this party started. We are excited to have none other than Dion Fields. Welcome him with us.
Hi, guys.
Hey, Dion. Welcome to our webinar. We're so excited to have you.
Thank you for having me.
Yes.
You know, no one can introduce themselves better than themselves. So go ahead and tell our audience who you are.
Well, guys, my name is Dion Fields, and I am the Vice President Division Manager of Cadence Bank. I cover two territories, states, which is Missouri and Arkansas. My role at the bank is originating loans and making sure all of the loan officers in our region are really originating loans in our communities. And we're looking at trying to make sure fair lending is in our footprint. But we also do the regular loans. We do those as well. So also, I'm a 25-year vet in the mortgage business. And I love what I do. I love education, and I love just helping our community.
Awesome.
Yes,
Awesome.
that's wonderful. And as we said, we're so happy to have Dion here because he is experienced and he has the knowledge and he's willing to commit his time. And time is valuable, but he's willing, and he is he's just excited about sharing the information that he has with our viewers.
That's
So
right.
once again, we thank you, Dion. And
Yes.
so let's move along now. Let's talk about the loan process.
That's right. So the loan process, Dion, let's jump into this conversation tonight.
All
Okay.
right.
So we've covered quite a bit already. And if you haven't already seen our previous webinars, go and take a look at it. But we're going to jump in today from the point of view of what is the loan process from pre approval to closing, right? So, starting with the first step, pre approval. Talk about how does one become pre approved? What should they expect on that application?
That is a great question. Thanks, Kimberly, for asking me that question. When you reach out to your lender, the first thing that the lender is going to do is gather a lot of the basic information. So we're going to ask you for your pertinent information. We're going to get all of your assets. We're going to get your income, your job history. We're going to plug all of that into our system, and we're going to pull your credit, and we're going to just look at everything as a whole to see if you qualify. The second step to that is once we get all that information in, we'll start collecting all of your pertinent documents, your pay stubs, your W-2s, things of that nature to actually to confirm, all of the things that we have on the application is accurate to make sure that we have all the income correct and all of those things. When we look at pre-approving you, that's pretty much the most important thing that we're going to do. So a lot of times we'll take our time in terms of making sure all of the documents that you have given us and all of the information that you have given us is correct. Because if we get that wrong, the whole process wrong. So we really want to make sure we're getting that correct up front.
Awesome, Dion. And sometimes we may use terminologies that are second nature to us in the real estate industry, but others may not really understand what it means. So we
Mhm.
have a whole webinar on the pre approval process, right? But just in general, explain what's the definition of a pre approval.
A pre-approval is when the lender actually look at all of your pertinent information, including your credit, all of the data on your job history, your banking information, your asset information, and they make a determination on how much you can get approved
Yes.
for and what type of product that you can get approved for.
And that's so important because we can't take our clients out to make an offer on a home unless they have a pre-approval.
That's
So
right.
that's the first step, and it's the most critical step.
That's right.
Absolutely.
And that pre-approval, you will receive the pre-approval document, and that pre-approval document will say, just like Dion mentioned, how much will you likely be approved for, because a pre-approval is exactly that. It's a pre-approval, right? And it allows you to know how much can you shop for your home, what is your price range, and then you find out your budget in within that price range.
Yes.
It will also tell you what type of loan you had, just like Dion mentioned, what type of loan you have. So is it a conventional, FHA, VA, or USDA loan, right? And so you'll know then what your terms are based upon the type of loan you have, and it will mention in most cases what type of down payment. Is it a 3.5%? Do you have a 5% depending on FHA or conventional loan, right? Or it will also include sometimes your interest rate. So that's the type of information you want to know before you start looking at homes, because that's going to help determine what homes you'd like to look at. So thank you,
Yes.
Dion.
And also,
Mhm.
Dion, tell our viewers how long the pre-approval is good for.
The pre-approval is typically good for 90 days. The credit is good for 120 days. And the reason why we redo it after 90 days is because The time frame it takes for you to find a home and close, typically once you hit that 90-day mark, you won't have enough time before your credit expires, because the credit expires in 120 days. So we like to just make sure we redo those with, if we're getting close or hitting 90 days from the time you get into your actual contract. And the contract is actually the agreement to buy the house that you selected.
Okay.
Okay.
And taking it, thank you. And taking it another step back, the application process with you, Dion, right?
Mhm.
How long is that application process? Is this something that they have to bring in their hard copies to you to apply, still on the application
Mhm.
process? Or is it virtual? Is there a link that you send out via email? How does your application process work?
For my savvy internet users, we certainly send out the link for them, and it's really quick. They do the link. It takes about 15 minutes, and then we can actually email all the required documents to us, or they can upload it to the actual site that we do the application on. But it's really easy. It's really simple. For our people who are not that savvy with the internet, I do make an appointment with them. Typically, it's either that day or the following morning where we get the application completed over the phone, and then we make arrangements to collect the documents. So we're pretty flexible.
So now you have those
Yes, very
documents.
good. And so once you have that application, right, and they've submitted it, you go through the processing phase, right? Is that
Mhm.
next? Is that the very next thing that you do in order for the client to be approved, to be pre approved, rather?
Yeah. Well, the processing phase starts, after the contract's in, right?
There you go.
But what happens is that we kind of pre-process it up front. We want to make sure that all of your the information that you provided to us is accurate. I mean, some people, may not have a really good understanding on how income works and how we calculate the income. So it's really good to do all of that in the pre-approval stage of it.
Yes.
And just to give you an example, if you're a nurse, you get three different types of pay. We can actually have the underwriter sign off on that income up front to make sure that we're calculating that income correctly, and that you're not going out putting a contract on a house and we got the wrong income, right?
Yes.
Or maybe we're not approving you for enough. We may just be approving you for what we think, and we don't have the income correct. So in certain circumstances, we want that income underwritten up front, not just looked at or reviewed. We want it underwritten up front, so that way we have our income locked down. And that's very, very, very important, right?
Yes.
It's a
Yes.
little bit easier for people that who are salaried. They can say, I make 50 grand a year, and we get the pay stubs, W-2s, and we see that they're on their salary. Well, that's a little bit easier, right? But there are situations where we really need to do a little bit more to make sure that we got the right information.
Yes, that's thank you. That sounds like it's a very thorough process. And so exactly what type of documents should people gather?
Great question. Great question. If you are self-employed, we're going to break this down with our self-employed people and our people that are not self-employed. So if you are self-employed, from the very beginning of starting the application, I'm going to ask you for your last 2 years of tax returns, right? And in some cases, we can use 1 year tax returns. So we're going to have that conversation up front. We're going to talk about what we need, what tax returns we need, but I want to get those tax returns up front. We don't want to wait until the end, or when you get your contract. We need to verify that up front. We'll get a copy of your driver license and your social security card. We'll get your last 60 days worth of bank statements, or any assets that we're using or counting in the loan. So that's for our self-employed borrowers. For the borrowers that are wage earners, we're going to ask for the last 2 years of their W-2s. We're going to ask for the last 30 days pay stubs. We're going to ask months of their bank statements, right? We're going to ask for any pertinent information in terms of assets. Do you have a 401k, right? We're going to ask for those things. And we want to collect all that up front. Again, the accuracy of the information is highly important for us to have that, so we can make sure that when you write your contract, that we have all the information we need.
Great,
Yes.
great. So when they provide these documents, does it have to be a hard copy, or do they
Can it be digital?
fax, do they fax and scan or
Mhm.
whatever?
Yeah. So that is a great question. When we collect the documents, you can email them to us. I can meet up with you and make copies. They can be the actual hard copies. We won't keep your documents. We'll always copy them and give it back to you. But if you want to just bring your originals up, you definitely can do that as well.
Yeah. And
Awesome.
that's great because you have some people who I think we mentioned before, they're not into the computers and faxing. So if they also have an opportunity to meet with you and to bring
Mhm.
in the documents, that's always great.
That's very
Yeah.
convenient. Yes,
Yes.
yes. And talking about the next part of the process, right? The loan
Mhm.
process. We went from the application for your pre-approval,
Mm.
and then you're under, you get the pre-processing, right? To go a little bit further even before someone is
Mhm.
under contract, to make sure that everything
Mhm.
has been verified up to a certain point, right? And then now us as realtors, we take you out and we start our showing of properties and searching for your perfect home, right? And so once we find that dream home, right? Now we are under contract. For you as a lender, the next step, right? The next step is the underwriting process. What
Mhm.
is, define for our viewers what the underwriting process is, and who's the underwriter? Everyone has heard of the underwriter.
Underwriter.
It sounds pretty daunting if you ask me, the
Mhm.
underwriter. But who are they? What is their role? And define that underwriting process for our viewers, Dion.
Okay. So let's start off with who the underwriter is. The underwriter is the person that checks all of the documents and they check the story that we're trying to tell. So that's why, again, I'm going to just go back and say it's highly important for us to collect the documents and tell the story to the underwriter, right? So we want to make sure we have all of that information and we know what it is before we send it up to the underwriter. But the underwriters simply go back and they're going to check the story that we told through the paperwork, right? They're going to make sure that the income's correct. They're going to make sure that you're working, right? They're going to make sure that whatever you told us, they're going to verify to make sure that's true and accurate from the beginning of the approval. So when we talk about the underwriting process, right? The underwriting process is, and I'm going to take a step back a little bit. Before we get to the underwriting, it gets to the underwriter. What we're going to do is we're going to order your verifications of employment, right? So, and what that is that's a form that we send to your employer, and they verify that you are still employed and that this is your income. If there's anything we need to clear up, they'll put that on that particular form at that time. We're going to order your verifications of rent, okay? And so if we're needing that, we'll send that to your landlord, and they will fill out that information, right? We will order your tax transcripts, and your tax transcripts are simply re-verifying with the IRS what you've given to us, right? And since 2008 happens, every bank does that now, where they're going to make sure that the taxes that you're providing is the actual taxes that have been filed. Once we get all of that stuff together, it goes up for underwriting, and the underwriter just run through the checklist and just to make sure that all of those things match up and work out. So, as you can see, if we do our job correctly and we collect the documents and review them and make sure it's correct, it should be a smooth sailing through underwriting, unless you quit your job or something like that in the process. So,
Don't do that.
Yes. and, and don't you guys check right up until closing?
we do. We at 10 days before prior to closing, we will verify that you are still employed. So, two things you shouldn't do: don't quit your job and don't open any new credit.
That's right,
Yes,
right.
yes.
And we went through a plethora of things not to do in a previous webinar. So make sure you tune into that, but don't do those two things and a bunch more, right? Give us a call and we'll make sure that you know what not to do in order to be ready to buy your new home. So, talking about that underwriting process and, the role of the underwriter and expectations of the buyer, how long does the underwriting process generally take?
Good question. That's a great question. So, typically, we want to make sure that we're getting all the documents as quick as we can, right? So, I may call you a few times and say, hey, I need those documents. I need those documents because the underwriting can take up to 1 to 3 days typically, depending on how busy the bank is at the time. If you would ask me right now, it's taking a day and a half to get files through underwriting. So it's not long at all. But we just want to make sure that we're doing our due diligence to do that. And also, I just want to share this since we're talking about underwriting time frames, let's talk about the processing time frames as well. And I think that that takes a little bit longer because you have to send out all those verifications. And a lot of times it may take a couple of days for the companies to send back your verification of employment or your verification of rent. So that process can take anywhere from 7 to 10 days. So you have the 7 to 10 day process from to do all of your pre-approvals, and then the underwriters can take anywhere from 1 to 3 days, depending on this.
Oh, okay.
Yes, yes. And it glitched just for a moment. So the last 30 seconds or last 10 seconds, you said it can take this many days depending
A
on,
day and a half.
yes, how long?
For
We
the
lost you.
underwriting,
Yes.
yeah, okay. The underwriting can take up to 1 to 3 days, depending on how busy the bank is, and the
Oh,
Awesome.
processing
great.
time. Okay,
Keep going. What were you saying?
and the processing time takes about 7 to 10 days. So you're probably looking at about 15 to 18 days on average to get all of that done together.
And that's when the loan commitment
No, the
is.
processing is right before the underwriting process.
Yes.
And the
Mhm.
processing you said is about what, 10 to 15 days?
Mhm.
Uh-oh, I think we have a
That is
lag
correct.
there.
Yes.
You frozen. Yes. Okay, awesome. And then the underwriting process itself takes 1 to 3 days, business days for the underwriting process.
Mhm.
After
That
you've
is correct.
collected all those documents
Yes.
we discussed
Mhm.
for the processing. Awesome. Okay, so now you've gone through the underwriting
That,
process.
that is correct.
And we're waiting for the all so
Mhm.
important loan commitment from you, the lender, right? And loan commitment,
Mhm.
Mhm.
that sounds good. A commitment.
Yes.
A lot of people like commitments,
Mhm.
right? So
Yes.
talk about what does that mean? What is a loan commitment,
Mhm.
and why does the buyer need?
Okay. So let's start off with what loan commitment is, right? Loan commitment is very important because what happens in your contract, you have a loan commitment date and you have a closing date. And we have to meet that as a lender. So what that means is that we're committing to you that we're going to get that loan, give that loan to you, right? And so typically a true loan commitment has no stipulations on it, right? So sometimes lenders do send them out with stipulations, but a true loan commitment has no stipulations on it. They may have something, they may say, well, we're going to make sure you're still working. That may be the only thing on there. But at the time of closing, you need to be working at the same job. But a true loan
Mhm.
commitment has nothing on the commitment, and it
Just
simply
that.
commits, it says that we're committed to you to give you that loan and to fund this loan because we verified all the things that we need to verify to approve it completely.
Awesome, awesome. And so, loan commitment, you explained what it is, you talked a little bit more about it. When
Mhm.
does the buyer receive loan commitment?
Great question. So when that loan come out of underwriting, right? Typically, we'll try to send that out then if there's no conditions. And conditions mean that there's nothing that the underwriter is asking us to get from the buyer to clear up any small issues that may still be outstanding. Okay. And so we want to make sure that we get that, and if there are, we're going to get those conditions, and we're going to send that back to the underwriter, and then at that point, we will issue our loan commitment. So it'll be one or two times. It'll be either right when that loan comes out of underwriting, or if there's any small things that we need, collect those things from the buyer and we'll send it up, and and that takes about a day or two to resend it up to the underwriter and have them sign off on all the things we need.
Awesome, awesome. And so it takes about that long. So when you have a loan commitment, should the buyer expect to receive something from you, the lender?
Yes. So we send out loan commitments to the buyer, and it'll pretty much have your name, your loan number, and what you're approved for. And that will be your proof to show your agent that you are ready to commit to this loan and that you can go past that loan commitment date on your contract. Because that's highly important. And we got to make sure that we can get that done before that date ends.
Yes, and that's what we always look at, that date on the calendar. Okay, we need to get this loan commitment done
Mhm.
before, because then if not, then here we go into extension world and have
Yes,
to write these extensions, which usually we haven't had that problem. Maybe one or two times we had to extend. However, I believe that you are so thorough, Dion, that we would not have to worry about
yes,
loan commitment, guys. So listen up. And I forgot to tell you folks, make sure you're taking notes. Get out your pencil and your pad. And
yes.
Kimberly, what do you always
And
say?
always screen record, right? But we will be on replay, so you can simply come back to our business page at Turner Team Realtors on Facebook or at the Turner Team Realtors on YouTube and watch the replay and share it out to your friends and family. And remember that there is a raffle for $25 for all of those who register and like our Facebook page in the month of April. We are looking forward to that raffle winner and announcing it here shortly at the end of the month. So, Dion, this is some really great information. We're wrapping up on the loan process. We're coming to the one of the last phases. But before we get there, my mother mentioned earlier, you look up until the last day and even sometimes on the day of closing for verification, even if that client has had a loan commitment. They still need to
Mhm.
do the things that they have to do to maintain their financial well-being. Right, Dion? Talk a little bit about that.
That is correct. Yeah, one of the things you want to make sure that you're not doing, and I just tell people this from the beginning of the process: stop using your credit because we don't want your credit scores to drop. In some cases, if your credit expires, we may have to pull a new one, and if we pull a new one and the credit score drops, that can be an issue. Okay,
Mhm.
don't open up any new credit whatsoever, right? Don't apply for anything, right? Because even if you don't get it, it can drop your score and then we got to explain it. So make sure you're not applying for any new credit, right? And then the last thing is making sure that you stay on your job. Don't switch jobs. If you got to switch your job, make sure we have that conversation up front before we even get into the contract because that's important, your job history, right? Sometimes you have to have pay stubs if you start a new job, so we just need to make sure that we can comply with the change, but don't change any of these things. If you have to change anything, please talk to your lender before you make any changes.
And be sure to
Yes.
consult with your realtors because we're going to
Yes.
make sure that you don't do those things and that you maintain because we are going to facilitate you through this entire process. So, no worries. We'll keep reminding you. If you ask
Yeah.
our clients, we're like a broken record. Remember, don't
Don't
do
do
these
this.
things. Remember, make sure you maintain your financial well being as it was the day you were pre approved for that loan to be able to close.
Yes,
So,
it's almost like waiting to exhale. You
yes.
cannot exhale until you get at that closing table and all the papers are signed. And then you can say, I we
Okay.
made
Awesome.
it.
Awesome. And so the second to last step in the loan process is pre closing. Pre closing.
Mhm.
So, talk a little bit about what that
Mhm.
is, Dion. What we already kind of talked about what to expect during pre closing, that re verification process that you just mentioned. But if there's anything
Mhm.
else that the buyer should expect, please elaborate on that.
Yep. So we're going to talk about the pre-closing part here, and one of the things in the pre-closing part is that you get sent out to you what we call the closing disclosures. Some lenders do it when the file is underwritten. Some lenders do it when the file is completely approved. So what that closing disclosure does is that it gives you all of your figures. It's still kind of an estimate, but it gives you all your figures, and you got to have that form signed 3 days prior to closing, right? So that's part of the pre-closing process that we're going to disclose to you for a second time your charges, your fees, your expectations, and getting that should really just confirm what we've kind of talked about in the beginning when you get your loan estimate, and should be kind of similar to that. So it's just steps that we do that the industry have to do to make sure that we're actually disclosing the right information and that you understand every step of the way what your figures are going to be.
Yes, and that's so important because you also let them know how much to check, whatever they have to bring
Mhm.
to the closing
Mhm.
table, what the
Absolutely.
exact amount is, and it's required by
Mhm.
law that
Yes.
you know
Mhm.
beforehand, before you sit down to close, exactly what the figures are, and that's so important. Now, so we're at the pre-closing, and then tell us about the closing and combine, funding and closing, and explain that,
Okay.
if you would.
So we went through all of the stages. We got everything done. We're very successful with all of the stages and get verifying everything. Now we're going to closing.
Yes.
The great happy day of closing, right?
Yes.
When we go to closing, we're going to take some pictures, right? And we're going to celebrate. But that day is designed to kind of go over everything that we talked about. It's going to be the final numbers, right? It's going to be the final stage and the final documents to the exact penny of what you should expect in terms of how much money you need to bring in terms of what type of loan you have, right? And if you have just kind of give an example, we try to find up front, but sometimes we find that people have a small HOA fee, which is simply if you're in a community that has a HOA, you pay a little bit of a fee per year for that. But we 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 you bring your cashier check to closing if you need money, and that's pretty much one of the final steps of the process.
Okay, well, I'm always happy when we go to closing, and I'm sure our clients are twice as happy
Yes.
because finally the day has come.
Now, talk a
Now,
little bit about the way the money is brought,
oh, okay.
right? So when you come to
Mhm.
closing, does the buyer have to bring a check, a money order, a cashier's check, or can they wire the funds, or all of the above?
Yep. Well, it really depends on the title company, but the common practices are you can bring a cashier check. Money orders, they will take up to a certain dollar amount. All right. But the common things that you bring that is acceptable throughout is cashier checks and wires, right? Those are the two things that are accepted throughout the many different title companies. But I would say that would be the safest thing to do is do a cashier check or a wire, especially if it's a big dollar amount.
And also, if the client is out of town and they're doing a remote closing, so that's when they would use wiring to
Mm-hmm.
wire the funds.
Yep.
Okay,
Yep.
so you don't always have to be there in person. You can be out of town, visiting family and friends or going on vacation. So
And we call that remote
a
closing.
remote
And
closing.
and so we have many clients who, if they're not in town, you can still close, right?
Yeah.
Whether you're a buyer or a seller. And that is more so, on the buy side, that has to do with you as a lender, Dion, right? And the title company agreeing to it.
Mhm.
And on the sell side, it has to do with the title company agreeing to it.
Yes. Well, all of that
Mhm.
has been so informative, Dion, and we are now at the I
Second half of
guess,
our
well, the
program.
second
Let's talk
half.
about these
But
loan
wait a minute, let
programs.
me just say
Yes.
this is the best part of the program, because
Mhm.
now we can talk about different loan programs, and everybody wants to know, oh, can I get closing costs? Can I get down payment assistance? Everybody wants to know about what program is going to be best for them so that they can
Mhm.
buy their new home.
Mhm.
So, can you give us some information about all the loan programs that you have?
And
Sure.
specify, Dion, when you're talking about it, what are the features of those programs? Who can use it? What's the credit score required? Debt to income ratio, and the savings that a buyer would need. And of course, any other factors that are specific to a particular program. Break it down for us. All seven. Let's go.
All right, let's go. Let's go.
Okay,
Let's go.
countdown.
All right.
All right. So, um, we're going to talk about the loan products first. So, one of the products that Cadence Bank have that we're very popular for, that we're really known for, is our 100% financing, right? And so, what we do is these products are designed for either low to moderate income. Typically, that's income that fits into a certain bracket. So, for Missouri, that low to moderate income is 77,400, right? And you have a 640 credit score, typically you can get 100% financing. Yes, you heard that correctly. It's 100% financing. There's only $500 that we require for you to have out of your own pocket. So in some cases, you may have to pay closing costs or a percentage of closing costs, but the down payment part would be covered for the most part. That is an awesome, awesome program. We have another arm to their product. If the house is in a minority majority census tract, we can also use our 100% program for that particular product. The beauty about that particular product, we can go up to $720,000 on a particular loan size and still get 100% financing. And neither one of these products have private mortgage insurance. Private mortgage insurance is required if that loan amount or loan to value is over 80% of the appraised value. Most lenders are going to want you to have private mortgage insurance that you pay at your expense, and it covers the lender if you default. With both of those programs that we have, we don't require it. So that saves you money in addition to not having to put money down, right? So that's a great, great program that we use.
And
Um,
what's the name of that program, Dion? You were talking about two at the same time.
mhm.
What's the first one?
The first one name is Right at Home, just regular Right at Home, and then
Right at home.
the second one is Right at Home Emerging.
Right at home
And
emerging.
mhm,
Okay. And the first one, I think I'll do it this way. The first one, right at home, that is for who? Who can use that?
those are the ones that either the houses in a low to moderate census tract, and the census tract is what the government labeled that particular area in terms of income. What is the average income of that particular area where the house sits, right? So
Yes.
either the house fits into that low to moderate census tract, or the buyer's income is under the 77,400 for, and that's for Missouri. So
Okay.
um, that's a great tool to use, and that's not household income. That's just our borrower. So if we've got husband and wife, and wife is on the loan or husband's on the loan, we only use the borrower's income.
That's really
Oh,
good
that's
because
great.
some banks
Hmm.
use, household. And now talk about who can use the right at home emerging program, which is the second program we're talking about. Who can use that?
This product is really amazing that we came out with. It's you can get 100% financing, but the loan amounts are a lot higher, right? On the right at home, without the emerging on the end, you can only go up to 450,000. With the right at home emerging product, you can go up to 720,000. So whatever the conventional loan limits are, you can go up to that. So if that house is in a middle upper census tract, right? And if it's in a minority majority area, you can definitely use that program. Now, that income qualification is 200% of the MSA income, which means that whatever the average income is for our area, we can go up to 200% of that. And so, in that case, for Missouri, I believe that's like 192,000. So you have a lot more play there in terms of how much money you can make. and you can get 100% finance and buying a $700,000 house. That is unreal, with no
Oh,
private
Awesome.
mortgage
Yeah.
insurance.
that's
Yes.
amazing. That's amazing. And there's no PMI you mentioned on these
Mhm.
two loans.
There's no
And
PM.
that's incredible, because the PMI, that's extra money that you have to spend each month.
Mhm.
And it's like buying insurance, which, I think in 2008, they were attaching these PMIs on all the loans. I mean, it was a lot of crazy stuff going on back then.
Mhm.
So I'm glad these loans do not have that, because
Yes.
Yeah.
that'll make
Your
the amount
monthly payment
must,
less,
yeah, and or more.
Mhm.
right? And
Hmm.
if you had it more, and if you don't, less, right?
Yes.
And so, talk
Hmm.
about for these two programs, what is the credit score requirement for the first, and what's the credit score requirement for the second?
Well, the beauty about both of these programs is the credit score requirements are the same, so it don't get
Awesome.
confusing. So hold on to your hats, put your seatbelt on. I'm going to give you some great information here. All right.
Okay.
So the first one, all right, this is unbelievable. This is like old school lending, right? We can do 100% finance if you have no credit. I, I've said it right. You heard it right. No credit. So let's just say you don't believe in credit. You never established any credit. We can do 100% financing. How do we do that? We take things that you pay on a regular basis and get a credit history. That's called building credit, right? So I can take your rent, I can take your gas bill, electric, cell phone bills, insurance,
Oh.
whatever you pay to a third party, and I
Mhm.
can get a history from that, and we can use that as credit. So we're going to look at that as if you have a 640 credit score. Now, if
Oh.
you have a credit score, right? If you have a score, then we do require a 640 score.
Okay,
640.
awesome. That's really great with those two programs. And quickly about debt to income ratio and the savings amount for each of these two programs. And then we have five more left.
Okay. So, really quick, the beauty about this program is depending on the credit profile, you don't have to necessarily have reserves for the program if it goes to our automated system, right? So I've had people just have $500 in the bank and we got those deals done. Okay. If the credit's a little challenging or if you don't have any credit, we will require 2 months reserves. You may ask me what reserves is. Well, I'm going to tell you what reserves is: the amount of your full payment, including your HOA fee, right? And you times that by two. That's how much money you got to have sitting in the bank. You don't have to spend money at all. You just have. So when we get done and when we close, I mean, it's your money to do whatever. We want to make sure at the closing table that you have those reserves if you fit into that category of needing it.
Oh,
Yes,
excellent.
awesome. And
Mm.
and reserves and savings, would you say those are the same things, or are those different? Because reserves has to be there when they close.
Mhm.
Savings could be utilized as part of the process, right?
Yeah. So they can be used as the same. So if you've got $5,000 in your savings, we can use that as your actual reserves, right?
Mhm.
If we're not spending it. Or the
Right.
difference between that, we can also use like your 401k. If you have a 401k, we will allow that to be used at reserves, right? We can actually have a gift. Like, say, for instance, if you don't have the reserves, you can get a gift from a family member for the reserves. We can use that as reserves. So we're pretty
Yes.
flexible on the reserves. And
Awesome.
typically, the reserve is going to be less than the down payment required if you went the route of putting a down payment.
Very good. And the main thing is that reserves have to be there once you close, right? You can't utilize the reserve money for your earnest money upfront, or maybe you can, but
No,
you
you can't. You're
you
right.
can't,
Okay.
and you can't utilize that reserve money for inspections or the appraisal costs upfront. It has to sit in your bank account. So your
That is
savings can the reserves can be part of the savings, but you have to have a certain amount of reserves left in your bank account. It's not touched during the transaction. And out of that savings, though, excess of the reserves, you utilize the money for your inspections, your earnest money, and your appraisal,
Mhm.
which all come out of pocket before we close.
Mhm.
That's
That is
right.
correct.
All right. Awesome, Dion. That's really great. And talking about those two programs, I'm sure has given a lot of people hope that maybe hadn't thought about being able to purchase a home.
Yeah, to
There's
afford it.
so
Yes.
many great products available, and you have so many more. So why don't we talk about the one that is for professionals?
Okay. All right. So this one is for so we the bank. The great thing about the bank is they're well balanced in their portfolio of products. And this one is for the upper income level clients. So if your income is at least $250,000 a year and you have $50,000 of liquid assets, you are considered a professional, right? And so what we would do is we will offer you 100% financing, no PMI, if you can meet those criteria, right? And the credit scores on those particular products are a little higher. Those are 680 versus 640. Okay, but if you're making that type of money, I guess the bank philosophy is they want to make sure that the credit follows the type of borrower and the type of risk. But you can do it between 250, $50,000 in assets. If you want to go up to 1.5 million in loan amount, starting at 750 to 1 million, you have to make at least 500,000 with either a half a million in assets or $1 million in assets, and that'll get you in the door on that $1.5 million qualification if you have 1 million in assets.
Awesome,
Okay.
awesome. And did you talked about the credit score?
Mhm.
Did you talk
Mhm.
about the savings required or the debt to income ratio for this
Mhm.
program yet?
Yeah, this program debt to income ratio is 43%. Debt to income ratio is simply your income divided by your debt. Or do I get that twisted up sometime? And that gives that percentage of what your debts are. So
Mhm.
we'll figure out that up front when we talk, but that particular program is 43%, and the right at home program and the professional program is 43%, but the right at home can go as high as 45%.
Awesome. And the right at home emerging is also as high as 45%.
Yeah. Yes,
Awesome.
ma'am.
And for the professional program, are there any reserves required?
Yes.
No, they got all that money in the bank, so they got the 50 grand. That's all they need.
Yes, that's what you
Whatever
talked
that
about.
number is, they're fine.
Awesome,
Mhm.
awesome. So, on to our next program, talking about the new construction.
Mhm. So we have this is a beauty, right? Most of your builders are going to require you to have 10% down in this market, right? We have a new construction loan where we can actually build from the ground up. You can actually buy your land and have your contractor or your builder build your house. What we do is we collect all of those documents subject to. We close on everything subject to. And then we start building your home. Now, the thing about this that's different about a box builder, so to speak, is that you're going to have to make interest only payments on whatever you draw out of that because you actually closed on that loan. And this is actually your loan. It's done. You don't have to wait to its billed to close. The pros to that is when we're building, right? If we have interest rate hits or whatever, we're not subject to that. So we're shielded from that because we're closing and locking that loan up front for the duration of it. We also offer a free relock if the rates drop from the time that we started to the time that you're done. We'll relock that rate for you absolutely free of charge if the rates have lowered.
Yeah.
The renovation loan is very similar, 10% down as well. You can buy a house that needs work. Ours is a conventional product, which means that we can be a little bit more flexible on the type of property you have. We don't necessarily need to have a certain percentage of the work in terms of the purchase price match. And I think that's some of your 2 or 3K loans. We can actually buy a house for 60,000, put $150,000 into the house, and we will be okay with that.
And that's the
So
So,
renovation loan. We're on to
yeah.
our fifth program now,
Uh-huh.
the renovation loan.
Okay, Dion, the renovation loan, is that a conventional loan?
Mhm.
Okay, it's
Yes, ma'am.
conventional.
Yes, ma'am.
And so
Yeah.
are all of these so far conventional?
Yeah. All of these loans that we've mentioned is a portfolio loan, which means it is a bank held product, meaning that we don't sell these loans to Fannie and Freddie or FHA. We keep them in house. Okay. And so all
Okay.
of these loans that we're mentioning right now are conventional loans because they're not securitized by VA or FHA. It's just a regular loan, which makes that attractive in terms of getting your contract accepted.
More marketable.
Yes, I mean, I just think this is amazing. The terms of these loans and the fact that they're conventional loans,
Mhm.
because the buyer is going higher and higher and higher on the ranks
Mhm.
of being able to secure a home.
Yes.
Because convention, I mean,
Yeah.
FHA, VA, we still get
Accepted with
homes and
those. Yeah.
accepted.
Yeah.
Um, but it's just really exciting that a moderate to low income, moderate to what is it, low income to
Yes.
moderate, that they
Mhm.
can get a
Yes. Mhm.
conventional loan as well. I
Yes.
just think this is
Mhm.
tremendous information. So um, we will spread the news.
Most definitely. And what else about that renovation loan might you want to share, or have you hit all the important factors?
Yeah, it works very similar to the construction loan. We close up front, we set the money in escrow, and they pay interest only payments until the process is done. But it's one transaction. It's not multiple deals. It's not multiple closings on either one of these.
Mm.
Awesome. And what type of property can someone purchase with that renovation loan?
Yeah, right now we only do single family residents. We're talking about two families, but right now we're doing single family residents only.
Okay, awesome. Yes, very good. Now,
It's so
I
exciting. Yeah.
know. On to number 6. What is that loan program? Talk about it.
Okay. So for all your doctors and your and dentists, we have a great product too. This is another portfolio product, right? And we can offer up to 103% on a medical professional loan. Okay. So what we do is we have to have a banking relationship with the client. Doesn't mean that they got to have a ton of money. They can take $100 and open up a checking account, right? And you have a
Yes.
banking relationship with us. And we will offer you this doctor loan at 100% financing, no PMI, no down payment required, no reserves required. This one's really flexible because the bank want to build the relationship with the doctors and the dentists. I mean, that's a given, right?
Yeah.
And But it's 103%. So we actually finance your closing costs up to 750,000. I want you to go over
Okay.
750,000, then just 100%.
Mhm.
But it's a
Yes,
great
yes.
product.
That
I mean, we.
yeah.
I was just going to say we have a special right now that we're offering a special rate, and it's a 7-year arm, and it's 5.625. So
Woo.
if you're interested in the doctor loan, you can do a 7-year fixed rate, a 7-1 arm. It's fixed for 7 years, and the rates are in the fives.
Yes, yes. And talk a little bit though about arms, cuz we're not too uh
Excited
excited
about
about a
arms.
adjustable rate
Mhm.
mortgage. That's what caused the issues in '08, right? But just explain
Mhm.
what an ARM or ARM, adjustable rate mortgage, is, as opposed to a fixed mortgage, which is what we more so advocate for our clients. Talk about those two
Yeah,
differences.
I totally agree with you, and I'm going to talk about that. But I just want to say arms are not for everybody, right? And first time home buyers, I tend not to recommend that. Okay, but doctors move a lot, right? And
Oh
so
yeah.
they're they're if they're moving in 5 years and they got a 7-year arm, in that sense, that makes sense, right? It has to make sense. Arm products were originally designed for short-term financing. Like I'm going to live here for. I know I'm in the military. I'm going to live in this house for 4 years, so I'm gonna get a
Mhm.
7 year arm, and I know I'm gonna sell it, right?
Right.
That's what the original design was. But what happened was everybody just started getting them,
Yes.
and they weren't really educated on them, right? And so we're very selective on putting people on arms, right? We really make sure that it's one of those type of situations where, "Oh, I'm gonna move out in a few years, so I'm gonna take the cheaper payment, and we really make sure that they understand that. But that is the definition of an arm, and that is the purpose of an arm.
Mhm.
A lot of people use and abuse those. The 30-year fixed is the option that we recommend for that.
Yes, it's more security. But with that arm, 7 years, that's great. Um, if it's great, even if you decide not to move, if the interest rates are going down,
Right.
by
And you
that 7 year, it's a risk, it's a gamble if you
Right.
decide to go further than a 7 year fixed rate, because
Hmm.
who knows what the interest rate's going to be,
right.
because
Right.
right now they're going up, then they come down, and and
And
they
Hmm.
go
they go
all the
back
way.
up again. Seesaw and interest rates. But nonetheless, the summary of an arm means that your rate can change, right? Depending on the term of that arm. So
Hmm.
you never know. It's not fixed. Where fixed, your rate stays the same
Hmm.
unless you
Mhm,
refinance,
mhm,
right?
Absolutely.
And so in the scenario that you presented, whereas you're going to be moving in 3 years and you have a 7 year adjustable rate mortgage, and for sure you're moving in 3 years,
mhm.
For sure,
then
right?
Yeah.
then maybe you can sway the Turner team to say, okay,
Oh, that
maybe
sounds
that
great.
sounds
Yeah.
good. But other than that type of situation, if you're not sure when you're moving and that kind of thing,
Yeah.
fixed rate is what we
Mhm,
advocate for. Dion may have his own,
mhm.
opinions on it as a lender,
Yeah.
but as your realtors, we would say if you're not sure
Mhm.
when you're
Right.
moving, you want a fixed
Yeah.
rate mortgage, even if that arm rate looks good right now.
Yeah.
You don't
Hmm.
know what it's going to look like in year 7 or whatever year term that arm
Mhm.
has, right?
Yeah, but
Right.
Dion is advising his clients exactly,
Properly.
yeah, what they
Yes.
need to know, so
Hmm.
that they don't get caught in a situation where they,
Yeah.
when it expires, that they're faced with a higher interest rate and a larger
Hmm.
monthly mortgage payment.
Right.
So we appreciate lenders like you,
That's
Dion.
right.
We wish there were a lot
Hmm.
more
Yes.
back in the day,
But
because some people didn't understand, and they just wanted to go ahead
and get
and
a
get
home.
that lowest rate, possible, and get
Hmm.
into the house, and then figure out what they're going to do later.
Right.
So
And
Right.
I'd like to add
mhm,
too, we're talking about residential right now. If you're getting a commercial loan, that's a different conversation,
yes.
right? Fixed or
Mhm,
arm is a
Right.
different conversation. Same type of loan, but
mhm,
a different conversation. So
yes.
thank you, Dion. Like my
Right.
mother said, you are excellent in advising the clients as to what's best for them.
Hmm.
Likewise as the
Mhm,
Turner team. And so talking now about program, I think
Hmm.
you might have covered all the factors on a medical program. Have you talked about the credit
I did.
score, the debt
Hmm.
to income ratio, savings, and or reserves?
Hmm.
Have you done
yeah.
Yeah. We don't
awesome?
need any reserves. Credit
No
score is
reserve.
680. It's a
Mhm,
great product.
Yes,
yeah.
that's excellent. And you know that if you're a medical professional, give us a call. We'll make sure that you connect with Dion. Even if you're not a medical professional, but you're thinking about buying your home and one of these programs sound really appetizing to you, give us a call and we will be sure to connect you with Dion Fields, VP of Cadence Bank, VP of Community Development, Lending Division Manager. Woo! I got it, Dion.
That's a
Okay,
long
awesome.
title.
Yes, yes.
Let's see if
So
we
we
can
have two
break this
more.
down
We
here.
have two more loan
CDL.
products. So go ahead and let's talk about the number what? Oh no, we're on number 6. We have one more
Yeah,
loan product.
Oh, we got
one
one
There
more.
you
more to
go.
Right.
go. Oh my goodness.
One more. Yeah. So this is actually not a loan product, but this is what we do to recognize our heroes, right?
Yes.
Oh
And
yes.
when we talk about our heroes, we're talking about our EMT workers. We're talking about our veterans. We're talking about police officer, firefighters, right? People that work in that arena. In addition to the special financing that we're offering, we give each one of these folks that serving our communities in these areas 500 an additional $500 off of their cost, and we credit that at closing. And they don't have to do anything for that other than show proof that they're veteran or they work in these type of fields. And we'll pull up the information from online to document that they actually do work in one of those fields that we just mentioned.
Oh,
Yes, that
excellent.
is
So they
awesome.
get $500 off at closing, right?
They do.
Oh,
So let me
Yes,
just put it in perspective. On the right at home loan, we give them $500 off. I don't think I mentioned this earlier.
oh, and that one
So they get
too.
Yep. So they get, if they fit the right at home product where they're making under the
Oh,
77,400,
hmm,
they get the $500 off because we can a low to moderate buyer, and so we want to make sure that we're helping those buyers. In addition to that, they'll get another $500 off if they are a veteran, a police officer, a firefighter, or EMT worker.
oh.
oh wow.
So
Okay, well, that sounds great. That really does sound great. Well, there's a lot of products out there. So
Yes,
if you're thinking about buying a home, one shoe may fit you very, very well.
that's right.
And we've got the lender.
Yes,
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 so
yes. Dion, you have such great products, and we're so excited to be able to give this information to the community. So many people may be on the fence. They don't know how they would be able to afford it, or maybe they are considering buying that next property and they are a medical professional or a first responder or thinking of building, right? All of these different scenarios and more that you presented for the products that they would be able to utilize in order to make this next move the most effective and efficient and economical, right?
yes. Oh.
Move for them. We are so excited about them. And
Mhm.
you also, viewers, you understand, if you didn't before, the loan process, pre approval, all the way to closing and funding. And we're just really excited about this information you've shared tonight, Dion. Thank you so very much.
thank you
Yes.
guys for having me.
You know, it's always a good time to have a good conversation about becoming a homeowner. We work with buyers, sellers, and investors throughout the country with our top realtor partners. We specialize in residential and commercial real estate. The Turner Team Realtors. I'm Kimberly Turner.
And I'm Denise Turner.
And we are a mother daughter and team, and we just enjoy having these educational empowerment webinars with you, our community members. Dion Fields, thank you again from Cadence Bank. And we look forward to the next time that we have you on our webinar.
Yes, it's
Thank you
really
guys.
been a wonderful hour, full of information, and hopefully, someone has heard a loan program or some information that will encourage them to contact a realtor, hopefully, us, and that we will help you to find your dream home. We will direct you to the lender,
Dion
Dion
Fields.
Fields
Yes,
with Cadence Bank, and and with the many many loan programs out there, there's no excuse. If you're working and you've been planning on buying a home, now is the time.
that's right.
These programs are available now. You never know what next year will bring or the year after. Nothing is permanent. So it's a good time. People ask us all the time, is it a good time to sell our home? Is it a good time to buy? And our answer right now is yes. It is a good time to buy.
That's right. And it's a good time to sell or invest. So, again, we appreciate you watching and tuning in for tonight's webinar of loan process and down payment programs. Next, we have none other than our next webinar with our special guest, Eric LaFleur, for Commercial Loans 101 on April 26th, which is a Wednesday, same time, same place, 6 p.m. to 7 p.m. Central Standard Time on the Turner Team's Facebook page at Turner Team Realtors. and our YouTube channel rather,
Yes.
at the Turner Team Realtors. And we will be breaking down commercial loans so that you can have a great understanding of how you too can buy commercial property.
Yes.
We're looking forward to that webinar, aren't we, Mother?
Yes, for all the entrepreneurs out there. Yes, get your own place.
That's right. Make sure you have a place of your own for your business. And we're looking forward to the next time that Dion Fields comes on with us. And hey, tomorrow we're going to have a replay of Give Yourself Credit. You can buy it. Also, focusing on commercial real estate as well. Our SBA program is being rescheduled, and you'll know more about that to be announced sooner than later. And we're looking forward to our SBA special guest as well. Well, take care, and
And
thank you again for tuning in. And
yes,
thank you, Dion.
thanks, Dion.
Thanks, guys.
Bye.